Hello everyone, this is the pre-market report video for today 25th Jan 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. If required, please pause and have a look. The top is Nifty's yesterday's price movement, whereas the bottom corner is Nifty's rate of change in price movement compared with some major stocks. In the early morning, ICICI Bank and HDFC Bank supported the market. Then after the initial hour, ICICI Bank started to drag the Nifty down. Then in the afternoon, Infosys and Reliance started to support the market, which again made the Nifty to move positive 200 points. The reason why I'm saying this, yesterday it's not the index that drove the market, rather the individual stocks drove the index, which means it's an indication of portfolio reshuffling. And that's the exact same reason what we discussed yesterday, portfolio reshuffling. FII needs to reshuffle their portfolio to meet the SEBI's regulation before January 29th. And it was very much evident in FII trade value. As we discussed a lot of times, usually any given day, their average was between 7,000 crore rupees to 13,000 crore rupees. But yesterday, they gross bought for 27,000 crore rupees and gross sold for 34,000 crore rupees. As a net, roughly they sold 7,000 crore rupees in one single day, which is at least 3 times higher trade value compared to the average. Fortunately, DII net bought over 6,000 crore rupees, which kind of supported the market yesterday. So in the last 6 trading sessions alone, FII net sold shares worth of 34,000 crore rupees. Again, regarding the possible reason, we discussed in detail in the last video itself, so don't want to repeat it. But as a cautious note, the final day for FII to get under the limit will be coming Monday 29th January. Tomorrow is Republic Day, so market will be on holiday. Then the remaining available day to perform the portfolio reshuffling is only today. So possibly we can expect similar kind of high trade volume today as well. But there is a silver light. This SEBI FII stock requirement was the well-known factor for both FII and DII. By chance, based on that, if anybody holds huge short position means, then they might short cover today. I think they won't prefer it to hold till Monday. Since tonight, US GDP data is scheduled release and tomorrow PC inflation for the December month is due. So it's obvious holding the position for the next 3 days is the huge risk. Hence, today most probably we can expect short covering or the profit booking. Anyway, yesterday sector wise, all 11 major sectors closed positive. Particularly media and metal increased around 3%. Regarding metal, earlier yesterday, Chinese central bank made the announcement that they cut the Chinese bank cash reserve requirement by 5%, which as a consequence expect to increase the liquidity by $140 billion worth. Hence, not just our metal stocks, whole global momentum itself improved massively. All European stock also closed significantly positive, especially Germany's auto stocks. In line with the European market and the previous day positive Netflix results made the US market to open positive. Then, during the trading time, S&P Global released the PMI data. Service, manufacturing and composite, all PMI data for US comes as above 50%, which means it's an expansion and it's at least a couple of points better than expected. It means the overall business activity in US expanded over 2% compared to that of the December month, which now diminishes the March month interest rate cut. We know good economy data is bad for stock market and also it increased the 10-year bond yield to 4.18%. As a result, at the end of the day, erased most of the positive movement. Dow Jones decreased 0.26%, S&P 500 closed near flat, positive 0.08%, and Nasdaq was marginally up by 0.36%. However, US VIX increased near 5% and again it moved above 13. Regarding oil, there was an estimation released by US government that their inventories got less reserves than the required storage, which expect to increase the demand. Hence, oil price increased more than 1%. At the time of this video, WTI crude trading near $75.5 per barrel and Brent crude traded near $80.5 per barrel. In case of gold, it closed at the same place as day before yesterday. Regarding Indian ADR, it's just following the Indian market. It haven't had any fresh price movement. In line with that, only ICICI Bank closed negative. All other 3 closed positive of over 1%. But there is one. Yesterday, Infosys demonstrated the generative AI in the Australian Open. So that's a huge advertisement for their AI capability. Maybe that can influence today. And for GIFT Nifty at 3 a.m. Indian Standard Time, it closed at 21,481. So again, for the moment, it's kind of indicating flat to 30 points gap up opening. So that's what happened in the global market. Now let's discuss the stock specific information. Yesterday in the aftermarket hours, TVS Motors, Bajaj Auto and Tech Mahindra were the some major companies who released their earnings. First, TVS Motors. Their revenue comes slightly below the expectation, but it increased over 25%, and the highlight here is its net profit increased 68% and it did beat the analyst estimation. So as a top line financials, it's looking good. Then for Bajaj Auto, both revenue and profit increased over 30% and both of them was above analyst estimation. Hence, Bajaj Auto results looks even better. And for Tech Mahindra, their revenue did beat the analyst estimation, but their profit haven't. It increased only 3.5% and comes as below expectation. Overall, auto stocks posted good results, but Tech Mahindra haven't. So that's all about the earnings. Then in another news, I read this. Yesterday in the block deal, Bank of America did sold over 7 lakh shares of Geo Financials, Infosys and HDFC Bank. And in addition, they also sold some shares of TVS Motors, Dauber and Page Industries shares as well. I mean, we know how much influential Bank of America is, so recommend to be cautious while trading on these stocks. As a summary, again another day, US market closed on the positive bias and GIFT Nifty also indicating the gap up opening of 30 points. But as we discussed, FII compliance deadline is approaching, US GDP data release and PCE inflation data release, all indicating the volatile and high trade volume day. Because market dropped from 22,100 to around 21,200 in the last 3-4 sessions, there is a slight probable chance for the short covering. But again, we don't know how much FII still remaining need to reshuffle, so most probably it will be volatile, but I can be wrong as well. Then as per stock open interest, ICICI Bank, Canara Bank, Bosch, IDFC First Bank, Asian Paints, Oberoi Realty and Adani Ports got an increase in open interest along with a negative close, indicates the short build up. On the other hand, ZTV, Britannia, Bank of Baroda, Bajaj Finance, Idea and L&T got an increase in open interest with a positive price close, indicating the long build up. About the things to look out, Punjab National Bank, Adani Power, ACC, SBI Cards, SBI Life Insurance, Vedanta, Hindustan Petroleum, AU Small Finance Bank are some of the major Indian companies' earnings results are still released today. And in terms of macro, during the market hours around 12:30, Germany's Business Climate Index and in the aftermarket hours, Europe interest rate decision is still released. For US, their GDP data, durable goods order data and weekly job insurance claims data are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened on a negative note but closed positive of over 200 points. Thus, on the daily chart, it formed a long green candlestick pattern with high volume. At present, the hourly momentum indicator has triggered a positive crossover and also signaling the divergent signals which can lead to high intraday volatility. And also it closed below the resistance level of 21,500. Hence, a decisive move above 21,500 could potentially trigger a significant rally in the index, and a confirmed breakthrough above 21,500 may propel the index towards 21,700 and beyond. On the downside, the support is situated at 21,400 to 21,350, below which the 40-day moving average is at 21,234. That's the critical support level to look out for. In case of Bank Nifty, it also opened gap down, which was also day's low and also broken the 200-day exponential moving average, but managed to rebound. Thus, on the daily chart, it forms the medium green candlestick pattern with the upper shadow, which is okay. And Bank Nifty managed to hold on to 45,000 mark for yet another session. Hence, we can expect the consolidation to continue going ahead within the range of 44,500 to 45,750. On the options front, the maximum call option open interest was at 22,000 strike, followed by 21,700 and 21,800, with new call option writing at 22,000 strike, then 21,600. Thus, from the options data, it's indicated that 21,700 to 21,800 is expected to be the next key resistance area in case Nifty moves further uptrend means. Whereas the maximum put option open interest was at 21,000 strike, followed by 21,300 and 20,500, with new put option writing at 21,400 strike, then 21,300. Hence the support is at 21,300 area. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.